Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
It's cruel, it's brutal, it's tough, it's not really all that fair, but it's a whole bunch of fun. Welcome to Share Shootout here on CNBC Africa, first in business worldwide. I'm Bruce Whitfield and welcome to the show. Now, did the ANC only hear of social media in 2014? Why are big companies like Cell C, MTN and Vodacom fighting over just 20 cents? And just why is it that Terra Lekota of Cope is defending Julius Malema of the EFF? We don't know the answers to these questions. We seldom do. But what we do know is we've got a man who has swapped New York for its world-class African city of Johannesburg, and another man who once saved a man from drowning in the seas of Central America. He's sticking to his story. I'm convinced it was the other way around. Introducing fresh meat on the butcher's block, Andrew, Mathew America Warren from First Avenue Investment Management, and he takes on the 3 appearances, 2 wins and 1 loss, Byron, the king of Melrose, the prince of Parktown, Lotter from Vestact. House rules: you bring your own booze. Okay, that's rule number 1 this evening. But also, you've each got 3 picks. Neither of you knows what the other is holding. And the big rule, of course, is that they have to choose at least one of their competitors' shares. So that is rule number 1. Each has got 30 seconds to make their argument to us. If you find them convincing, then you give them a tick on your personal score sheet. If you think they should be booted out, send me a personal SMS and I will deal with them immediately. Byron, you are an old hand at this game. You are battle scarred, and if this wasn't a family show, we'd ask you to take off your shirt and your jacket and show the whip scars across your back. But as we're trying to keep it decent, I'm going to give you the opportunity either to let the fresh meat go first or decide whether or not you want to go first. How do you want to play this?
I'll let Matthew go first.
We'll let Matthew go first. He's such a nice guy, isn't he? That's the way the game is played, Matthew. There is no fairness in this game. I'm interested in your first pick because we've seen the entire banking sector come out with results over the last month or so. They've been fairly mixed. We've seen very decent results out of First Rand. We've seen some better results out of Standard Bank. Nedbank is performing nicely. Barclays Africa, though, has really not shot the lights out. In 30 seconds, tell me why you like it.
Yeah, so Barclays is cheap at this stage, and it's for a reason. So it started with the largest retail bank in the country. Not only did they not have an appetite for unsecured loans, they also were kind of focused on fixing some things internally. During that period of time, the gap was so large in risk appetite that customers started to flow out, just recently especially. They launched the Prosper campaign. They're getting a handle on their middle and upper customers again. And as they make that turnaround, I think we're going to see a better turn in earnings as well from a low valuation.
Okay, within his 30 seconds, he is fighting. I don't like the Barclays Africa story, Byron. I haven't liked the Barclays Africa story for a terribly long time. I'm not too sure that they've necessarily sorted out all the issues internally. Yes, it is cheap, but it's always cheap. Byron, what is your thought?
The banking sector story in Africa is quite an exciting one. I always say, though, that there are concerns about transparency, and Barclays Africa comes to mind straight away. You know, last year, everything was going well, and then all of a sudden they came up with an update that they had to write down a whole lot of mortgages. And as an investor, and you're putting in your hard-earned money into these kinds of businesses, do you really want those kind of stories coming out? Even the biggest and best bank in the world, JP Morgan, paid nearly $15 billion in fines alone last year. What exactly are they doing behind those closed doors?
And the Barclays Africa thing is interesting because I remember that big shock with the mortgage book, and you just wonder, okay, so they found that one day somebody was going through a filing cabinet somewhere in the basement of Barclays Africa House or whatever they call it in downtown Joburg. Oh dear, bad mortgage file. What else is in that filing cabinet that they haven't yet got to? What about that one, Matthew?
Yeah, no, it's fair. It's a fair criticism. Back in 2012, they took a big hit on the mortgage book. It seems like whoever was in that unit at the time was kind of papering over the real extent of the situation. So they found that at the board and exco level, and they sorted it out. And it was painful.
Especially send Maria into a room with a short stick and the person who ran the mortgage book at the time. Absolutely. So they're tidying it up. The Africa story is interesting as well because here are the 2 major forces, South African forces on the African continent in banking. You've got Standard Bank on the one side and you've got Barclays Africa on the other side. I don't remember the Barclays Africa numbers, but I do remember the Standard Bank numbers, and they lost something like 366 million rand last year doing business on the African continent, and they have been doing it for nearly 20 years. Is that not a concern for you, Matthew?
Yeah, if you look at the African franchise, it's actually, in my opinion, the Barclays operations are much more seasoned. They've been around for a long, long time. They've produced reasonably steady profits through the cycle. Standard Bank has some very seasoned operations nearby, and then they have a lot of startup operations that are subscale and trying to get to where they need to be. So when I look at the two, I actually favor Barclays quite a bit.
Byron, on the Barclays Africa business or the Standard Bank Africa business?
The Standard Bank business, I think they struggled in terms of retail, but their actual investment banking side in Africa did really well and it's really profitable. I do like the story, as I said earlier. There's no secret that Africa is extremely underbanked, and the Barclays brand is a strong brand. But again, I just don't want to put my hard-earned money in a business where I don't know what's going on behind closed doors.
So you're shooting it down?
I'm shooting it down.
Your first share. He could have been nice, but he wasn't. You're shot down, Mathew. Thanks for playing. Right, Byron Lotter from Vestact. Got this old one. I'm so bored of you guys at Vestact telling me how wonderful this company is. It's interesting because it has come out with results recently. Pretty decent results. They've got some geographic issues. Have MTN. They've got some money locked up in Iran that they can't get out. Well, that'll teach them. But you like the overall MTN business, despite the fact that they're fighting over 20 cents with Cell C. So give me 30 seconds as to why MTN is on your list.
Well, just as Africa is underbanked, it's also extremely underconnected. MTN's latest results, 17 out of 100 phones are only smartphones. And that's craziness when you consider, how life-changing a smartphone can be. MTN are going to be providing that platform for Africa to connect. I'm not worried about voice coming down. I think that data story is going to be huge going forward. Good PE of 15, great dividend yield of 4.5%. I think this is a very safe bet.
There we go. He took up your 3 seconds that you didn't use last time, Mathew. Mathew, do you like the MTN story?
We don't, actually. So when we look at MTN, we see kind of world-beating margins, world-beating prices that the consumers are paying. And really what you see now is regulatory assault. You see it here in South Africa stepping up quite a bit with the higher asymmetry. It's going to give the likes of Cell C a lot more room to compete. Even on the data side, you see a lot of revenue growth, but there's no network effect in data. Data is a pure commodity. Wherever you can get it, where it works, really all you care about is price. So while you're going to get revenue growth, we're really not sure about the margins, return on capital in that business.
Okay, I'm smelling gunpowder. Byron, defend yourself. Quickly.
I disagree with that. It's not necessarily about price, it's about the quality of the connection. And I've seen first-hand examples of people shifting from Cell C to MTN because the connection is just not strong enough. As iPhones get more sophisticated, Samsung and Apple having this huge battle, these phones are going to get more and more efficient. And you're going to want, when you slip onto Facebook, you're going to want that connection to bring up your wall straight away, instantly. So I think the quality of that, and MTN being first movers throughout Africa, infrastructurally as well, the quality is going to be absolutely paramount.
What does it cost to deliver this quality that they might struggle to charge for?
They spent 34 billion rand last year.
They do.
They're going to spend more this year.
Isn't
but
that
they're
the problem?
extremely cash generative. They're still paying a 4.5% dividend yield, and there's still huge room for growth. 1 in 10 people in Africa are connected to the internet. So we still got 90% under connection within Africa.
Right back at you.
I think, from history till now, they've expanded geographically and they've really capitalized on voice and voice margins, and they've used that money to invest in things like data. I mean, you're importing a lot of products, and you have to put up the base stations, the technology to get the service that we were talking about here. So really, if you bring down those voice margins, now you're going to be under a lot more pressure to deliver on the data side, and I think it's going to be tougher economics.
Okay, tough economics, but
people are not going to stop talking.
They're not. Well, they are talking less, and I just look at what WhatsApp has done to sending SMSs, and I wonder just how long it takes for increased app technology, which allows me to talk via an app. We can already do it using a range of apps. The quality is not fantastic, but people are incredibly tolerant if they know they're getting it for almost nothing.
I just think communication is one of those things that as the product gets cheaper, you don't consume less to save money. You consume more or the same, and in terms of price. So you'll start talking more if it's cheaper, and pay the same bill every month.
He's an evangelist. You are not. You're taking his evangelical perspective and you're shooting up in flames.
Yeah, I don't like this idea myself.
He doesn't like the idea himself. No, he's not going to buy you, I'm afraid, Byron Lotter, on that particular point. And let's see whether or not, Mathew Warren, you can convince Byron Lotter of stock pick number 2 on your particular list. It's worth 54 billion rand. It is historically the best performing, in the history of the last 5 years, the best performing retailer in South Africa. We've seen the likes of Pick n Pay flounder. We've seen Spar plod along. We have seen ShopRite boom and then return to some level of normality. What we've seen with Woolworths is a continued steady, nice growth trend. In 30 seconds, why will this continue?
Yeah, so Woolworths dominates the high end of the grocery market here in South Africa. There's really not substantial competition at that level. You see Checkers and you see Pick n Pay battle to match the same offering that Woolworths has. And not only that, you have an aspirational element, both whether you are making a little more money and you want to eat a little better, or if you want to eat healthier and really believe in a cleaner supply chain to your table. So there's a lot of elements there where people want to buy up in terms of food. On the clothing side, they have their own brands coming in from Australia at 60+% gross margins.
60% plus gross margins. These jeans. These trainery jeans.
Yes, that's right.
How does that make you feel?
Cross, but comfortable and smart and dapper. Exactly. Let's go back to you, Byron. The Woolies story. How can you shoot it down?
Yeah, no, I agree 100%. I love Woolies. I'm sure Mathew will agree. When you speak to people who come into South Africa, tourists, people from outside, from first world countries, and you show them Woolworths, and oh my gosh, Woolies is amazing. It is a first world retailer, and I think that's going to, push them through tough consumer times in South Africa. And this is a great buying opportunity.
Does the South African demographic story, however, play in Woolworths' favour? Are we getting enough people out of LSM 5, 6 and 7 and into 8, 9, 10 and above so that they can be regularly shopping only at Woolworths and filling up only their trolley at Woolworths and not going to look for a deal on washing powder elsewhere?
Sure. I mean, we've seen that so far. So their growth has been much better than their peers. If there's a downturn in the economy, will that slow down? Sure it will. But if you had a sharp downturn in the economy, who's better positioned? Pick n Pay with their 1% and change margin, or Woolies sitting on a strong balance sheet with very healthy margins? Who can withstand the pain better and come out the other side? I would bet on Woolworths every time in that way.
I have a feeling, Byron, you might just accept this one.
Yeah, don't underestimate the natural hedge they're building up there with their Country Road asset in the US, in Australia, which is becoming more and more significant as earnings grow on that side.
It has been amazing how that business has turned around in the last 5 or 6 years, and has also turned around the fortunes of Woolworths' clothing division, which was an absolute drain and a dog, frankly.
Yeah, that's where Ian Moyer came. He came from clothing, and that's where the margins are. So yeah, I'll take Woolies.
You'll take it. You'll take Woolies on that particular front, Mathew. You've been accepted on Woolworths it's got a fairly decent dividend yield, about 3% or thereabouts.
That's
so
right.
Nice cash. Its share price has pulled back recently. You both like it at this particular point. Okay, now this is interesting. I mean, this is worth over half a trillion rand. This is worth 550 billion rand. This is a company that makes flashy goods. It's a company that makes you feel richer than you necessarily are because you can carry a Mont Blanc pen or a Daniel wallet or whatever the case might be, and you can flash your status around, especially if you're in a place like South Africa where we like status, and in places like Asia where status is ever more important. What's it called again? Oh yes, Richemont, Byron, in 30 seconds.
Yes, on a forward P basis, the business has never looked cheaper since it unbundled that tobacco asset. There's an amazing phenomena amongst developing markets that when you come across wealth and you enter a middle class background, you want to flash your wealth. And I think Richemont are at the absolute forefront in that. There's a huge gift-giving culture in China, but now we're seeing Europe starting to come back. So as China starts to stabilize, I think we're going to see great growth coming through from the developed world in the US and Europe.
Okay. Now, didn't I see a story the other day about Chinese government officials being clamped down upon in terms of gift-giving? That would be a bit of a drain on Richemont in that country, which has got hundreds of stores now that it's opened up in the last 10 years.
Yeah, no, I think we saw that, and we saw some effect of that in Asian sales, but those purchases can just as easily take place offshore, and I think you see that as well. So you see Asian buying in Europe, you see it elsewhere. So I think that's a temporary headwind. But if you look at the brands, if you look at Cartier, you look at the watches, these are some of the best brands in the world in the luxury space.
Are they the best quality product? I mean, that is the question, Byron. Maybe that's one
Ask
for
Johan
you.
Rupert that and see how.
No, well, I mean, when I recover and I'm in hospital after even questioning the quality of the product, is it about brand or is it about quality? Because ultimately, they've created the brand off the back of quality, but do they maintain the quality?
I think that's one of the absolute priorities of the business. You know, these brands have been going for over hundreds of years on the back of, like you mentioned, good quality. So they're not going to compromise that. You know, a lot of the stuff is still manufactured in Switzerland, and you know, 100 years of history and brand growth, and they have that all under their portfolio. So I think, you know, it's a growing business, still very much so. We're not going to see the growth that we saw in the past, but I think, you know, this is a great buying opportunity. It hasn't done a lot over the past 4 or 5 months. It's been sitting around 100 Rand.
Are there any brands worth buying still, I wonder? I mean, in terms of adding to the portfolio of brands, because at some point these guys have got to make acquisitions in order for the next growth spurt.
I think it'd be tough, actually, possibly within the jewelry space, or they could create their own new brands in the watch space. But I actually expect them, if anything, to maybe get rid of some of the lesser brands that make up a small part of the portfolio. If you look at other branded companies, they have strong categories, weak categories, and everything in between. And then when the economy gets tougher, you see all kinds of trading down, and you see results that were there and then they disappear. They have such a strong group of brands in the right categories. I don't see why you'd really want to mess with
I've got
that.
a feeling that you like it.
I do.
He likes it. You're going to take it?
Yes.
Mathew takes.
Can I say one more thing?
Go on. You're going to. Anyway.
I don't see them buying any new brands, but I do see them, and they already have done this, expanding in the online retail.
Okay.
And I think there's a lot of potential for that.
That was Pret-a-Porter, the business they bought about 5 or 6 years
and
ago.
that's
and it has grown
not
nicely.
necessarily jewelry, because you want to touch and see a watch or jewelry, but with luxury clothing.
There we go. As
Great
he knows,
margin.
as he knows, he's such a dapper individual. Well, the newbie pull a fast one. The old dog. Will he rule the day? Who will win? Who will go? Who will stay? That is the big question. You won't want to miss the final share picks. Let me tell you what you've got so far. For Byron Lotter at Vestact, you've got MTN and Richemont. MTN shot down, Richemont accepted with aplomb. You may regret, however, accepting Richemont, because number 3 is an interesting one, which has come under pressure recently. You may have to accept that too, in which case you sign your death warrant, I'm afraid, on this show. And then finally, from Mathew Warren, from First Avenue Investment Management, Barclays Africa shot down, Woolworths accepted. But number 3 is an interesting pick as well. Strategically, they are playing a fighting game. We'll see you when we come back. You're watching Share Shootout here on CNBC Africa, first in business worldwide. Welcome to the show. It's really good to have you with us. We've got 2 battlers on the block. Byron and Mathew gave us their stock picks. We got Byron's picks of MTN and Richemont. Richemont accepted, MTN shot down. And then from Mathew Warren at First Avenue Investment Management on his first outing, so we have to be nice to him so far. Barclays Africa shot down and Woolworths accepted. Because you went first last time, going into the last round, Byron is going to tell you why he likes Baker's biscuits. In 30 seconds, I think it's the shoes, not the biscuits, but tell me in 30 seconds why you like AVI.
Well, food manufacture has always been quite a safe bet, but now you're throwing in operating in a continent where we've got a big growing middle class, we've got growth over 5%, and we've got companies like ShopRite and Massmart expanding up into Africa. They are, of course, going to take those AVI brands with them, and AVI don't have the operational risk. Then, of course, you've got the luxury brands, which again we spoke about with Richemont. I think is fantastic. Good margins. We've got lots of people coming in from previous poverty, and they're spending that money.
They're spending that money. Whitey Basson was telling me the other day about how much JC Leroux, they're sold in Angola. Vast quantities of JC Leroux, relatively small number of outlets, but more than is being sold in South Africa. So that the brand story and the aspirational story is very strong. Now, if you like Richemont, Mathew, you've got to like a good chunk of AVI, but do you like it enough, I wonder?
We actually do. We like it quite a bit, but let me pick on the weak points, because maybe that'll make it more interesting. So, inside AVI, you've got, in the coffee business, you have a global player that's really trying to take some market share. So you got a threat there. In the fishing business, this thing cycles around, it's up and down.
They're slippery buggers, you can't find them.
That's right. Does the brand work in fish the same way it does in coffee or tea? I think that's a question. In the clothing business, we had such a boom. How much of that demand is sustainable? These are some of the questions we ask ourselves, so I'll go ahead and pose those now.
Okay, there we go. Those are the questions. What are the answers?
Well, if you have a look at the share price, this one's done really, really well over the last 10 years, but over the last year, or actually 2 years, it's flat. So I think all those issues are factored into the share price. We've got a really good buying opportunity. Yes, the South African consumer is under pressure, and that's why the stock is under pressure. But is it one that you want to be holding for 10 years? I think so, definitely.
No, Mathew, you admit you like it. I mean, it's a schoolboy error on your first outing out. We may forgive you, or we may not forgive you for admitting you like it. You pointed to the weaknesses. Those weaknesses, Byron argues, are priced into the share. Do you agree on that perspective?
I have to agree, actually. We see value, we see high quality, and we see value when we look at AVI. Some of the categories they play in, while you have some additional competition and a weak consumer, they're very good categories, much better than some of the weaker categories within Tiger Brands, for example. So you have to like the company, and even on the clothing side, the sales are holding up decently in a very tough environment.
I was in downtown Cape Town the other day, and there are lots of interesting little shops and stuff, but there was an AVI store in there, Kokai or one of these, I forget which brand it was. Went in just for interest's sake to have a look. Beautifully manufactured shoes for many thousands of rand, and people were handing over real money for these shoes. And people not dressed nearly as beautifully as you are, but spending the money on shoes.
Yes. No.
And that aspirational quality of it, you like it. So you have to accept it.
I suppose so.
Okay, Byron Lotter's feeling smug right now. Let's see whether or not he can really turn this game on its head and see whether or not he is going to have to accept your final pick, because your final pick comes out of the stable that gave birth to Richemont. First, the Rupert started out in cigarettes in the garage on a machine making cigarettes by hand at Anton Rupert, and over the years it's gone from tobacco into luxury goods. You're going back to the beginning, and you're going to British American Tobacco. No arguments on principle. We're talking about investment value. You can't say we don't like it because it's bad for you. In 30 seconds, tell me why you like cigarettes.
Well, let's start there. So people are smoking less, which is a good thing, let's face that. But you see volumes down every year. Every time they report earnings, volumes are down and prices are up more. So not only can they do well in a declining volume environment, they actually are able to expand operating profit margins, which is incredible. And they do it with such a steady drumbeat that you can go to sleep at night, wake up in the morning, and not think and not worry about the share. It's there, they're making money for you, they're getting better, and they're creating value at the same time.
And is it not expensive at 18 times last year's profits?
I think you could have said that for the last 10 years, and yet you could have made money all through those 10 years. It's a premium valuation that they justify.
I dare you. Shoot it down. Go on. Try. Without being all preachy and about it.
Not only has the entire developed world cut down on smoking, but we're seeing new laws coming into huge smoking nations such as China and Russia. How possibly can you carry on growing earnings and profits when your volumes are declining?
Answer that question, Mathew.
They're doing huge share buybacks.
Pause. Okay, we'll talk about share buybacks in a minute. It's relevant. But that's a strong argument to be made against British American Tobacco, because the world is laying siege at the door of the tobacco companies.
No, it's true. I mean, when I was in high school, let's say, I think cigarettes were under $2 a pack in the States. Now you can get them for around $20 a pack in New York City, and people still pay it. So the pricing power is actually phenomenal, and I think it goes back to the nature of the product, quite obviously.
And you've got the French, and the French are not going to stop smoking for anybody. I mean, that's also true. But okay, sorry. And what about buying back shares? What's the risk of buying back shares?
Just on the pricing power, I mean, those price increases, I'd be interested to see how much of that is pushed up by British American Tobacco and how much is actually taxes increasing. And I would say that taxes would be a lot more than actual British American Tobacco.
If you look at the cost of manufacture, and it costs you $1 a box to manufacture it, and the price goes from $1 to $20, whether your element of that is a 20% element of the price, your profit margin expands considerably. Your $1 becomes $2, and you've doubled your profits.
But you've got declining margins, so you put under pressure to increase your price. The government are increasing prices at the same time. When is that point going to reach where the volumes start declining at a faster rate?
I want you to go out of the studio now and go take a box of cigarettes away from a smoker and see what happens to you. They're addicted, Byron.
I understand
it's difficult,
that, but a lot of people are stopping.
He's such a doormany about this. Okay, so you're shooting it down.
Yeah, I think a lot of price outperformance locally has been the weaker rand, and I think it's at 18 times earnings for a business that's growing volume. That's not growing volumes. Volumes are declining.
Just shoot it down. Just end it.
Cool.
Euthanize. Do it. Are you shooting it down?
Yeah.
You should get down. You're shot down on that one, Matthew, which makes my job incredibly easy this evening because Byron Lotter, for the first time ever, has got a right to feel smug because he's had 2 of his picks accepted. Why? Because he went into the same sectors. That's a little bit lazy. Should that count against him? I suspect it should count against him because he went luxury goods twice and then he went for an old dog called MTN. On that basis, I'm quite tempted to shoot him down. Mathew Warren from First Avenue Investment Management comes onto the show for the first time, well-mannered and respectful, and dresses nicely as well, so he gets extra points for that. Barclays Africa, nice try, shot down. Woolworths, absolutely accepted, and his British American Tobacco, a £1 trillion business that has grown so spectacularly. But I buy the argument that so much of the gain we've seen in rand terms is because of our weak currency. So, Mathew Warren, it's been very nice to see you. It's been very nice, but when you come back from orbit one day, we'd love to have you back, but you need to go back and read the schoolboy book of how to fight dirty. You're toast. Whew, it was hot. Okay, there we go. The winner, Byron Lotter from Vestact. 2 weeks in a row, Byron. This is a personal record for you. We'll be back next week on the same time, at the same place. And we'll have 2 stock pickups. So Byron versus a piece of fresh meat. And the most ruthless stock picking show yet on television. Do send us your thoughts and suggestions. You can either tweet CNBC Africa or you can tweet me your compliments on @BruceBusiness. Thank you so much for watching Share Shootout. I hope you were not only entertained but informed as well. Send us your tips. Tell us what you would like to see. If you'd like to see some tweaks to the show, by all means, share those with us as well. Well done, Byron Lotter. See you next time, and we'll see you next time as well. Good night.